Covering small companies for over 20 years of my life, I've found that there are what you call the pillars of success. So I call that viability, sustainability and credibility. So viability is really about the returns on capital, how high are those returns, how volatile those returns. Really, it all comes down to returns. The second one is really about sustainability, which is about duration, how long that return in reality lasts for. Is it 1 year, is it 10 years, or is it like 99 year, like an airport lease or something like that? So that's really about sustainability, which is about balance of power, pricing power, cash generation, organic or acquired growth. So that's really about sustainability. And then credibility for me is really about sort of trust, your ability to trust the accounts, your ability to trust management. And that credibility score is typically where the disasters, you can start to see the disasters. If there's cracks appearing in a story or a business model, you'll start to see it on the credibility end. Overall, in the portfolio structure, it's really analysed and risk managed by what I call QMTV, so quality, momentum, transition and value. And that's where you look at the stocks in a portfolio context. And that's really looking at where the risks will come from. So quality, I call the love quadrant. Momentum is kind of like the nightclub, or what's hot, it's consensus. Transition is really no man's land, it's sort of the in-between. And then value is really your out of favour, neglected environment. And I think if you can find opportunities in each of those environments, but you need to look for different things at different points of the cycle in those environments. And that's really how I do manage risk. So if I just go through quickly, value is you want to find, if you're an articulate pessimist, you want to find things that have good free cash flow yield, no balance sheet issues, no credibility issues, and they're quite clean companies, just very out of favour. So neglected, but out of favour. And if you're an articulate pessimist, you can see opportunity in holding those. So Qantas, for example, was a big one that the fund did very well in. Bought that at about $1 and it subsequently went to $4 before it went out of the index. So that's a four-bagger from a value situation. Transition is, as I said, the no man's land. So value tends to come through transition where there's either a catalyst, there's a definite plan. So Qantas, for example, Alan Joyce had a plan. There was cost cutting, there was streamlining of the fleet, there was an attitude to significantly improve the service level. And that really moved it away from being value to being what I call transition. So it's moving out of this kind of neglected environment to having milestones and actual active management changes in place to move it out of that value space. And then you really had, for Qantas, the oil price fell, you had earnings upgrades, you had cost-cutting upgrades, you had a fear coming out of the stock as those milestones and plans did actually become executed. So it went from $1 to effectively $2, then from $2 up to $4 when it got into momentum. And momentum, as I mentioned, it's the nightclub segment. It's where things are hot. It's where things are cool. It's really where consensus is very happy and very comfortable. So earnings are going up, risks going down, multiples are expanding, and the market's moving towards those stocks. But they are short duration. So cyclicals typically, go through this value transition momentum cycle. On the other side, you've got quality businesses, which are, what I call the love quadrant. They're beautiful businesses, which from a business school perspective, they'd be the classic things that you want to own. High ROE, strong sustainability, strong management, long duration, structural winners. Typically in healthcare and technology, that's where you find those structural long-term winners. And they can be, 5, 10, 15-year stories. And they're the stocks that I, do spend my life trying to find, that you go from small cap to mid cap to large cap over a 10-year period. And that's a phenomenal return. It's really a psychology of human psychology and psychology of accounting and mathematics and multiples and returns. It all fits together very neatly in my experience, because the paradigm of what you think about and what you look at is blinded by kind of where you are. And I think of these journeys as kind of little jungles. So the love jungle is very comforting, but the downside of that is you get very complacent. Complacent evaluation, complacent at competition, complacent that things are changing. And that's where your risk is. Momentum is, like I said, the nightclub. So your risks are that you are in the middle of a herd or in the middle of the nightclub, and until the lights go on or you stop drinking the Kool-Aid, you don't realize it until it's too late. So you need to be very, very self-aware in that momentum jungle. And then transition is no man's land. You're going to be very uncomfortable. You're going to see milestones, but you're not going to have consensus on your side. So you're doing things that are out of favor, but management are doing things that you can see and touch and feel, and earnings are improving. So you should feel comfortable, but you don't have consensus behind you. And then value is even far, more riskier in terms of it's very against consensus, and you need to think about balance sheets and bankruptcy risk and is this business broken? And that's really the value jungle, I guess. And these are 4, environments where the opportunity of why you win and then the opportunity of the risk is really driven by where you are in that journey. And the journey, changes. So you need to sort of change your paradigm of thinking as it goes through this journey.
Any advice in this video is general advice prepared by Morningstar without reference to your financial objectives, situation, or needs. You should consider the advice in light of these matters and any relevant product disclosure statement before making any decision to invest.